up, everybody? Welcome back to Royal Blu FX. In today's video, we're going to talk about why CHOCs happen in the Forex market, so stay tuned. The whole purpose of this video is to really educate viewers like you and letting you know why certain things happen in the Forex market. If you haven't already, please hit a huge thumbs like on this video and also subscribe to our channel because it definitely helps our channel for the future content. Alright, and one last thing. If you're struggling with trading and you don't know how to trade and you're looking for a mentor, or you've traded but you're just not getting the success that you're getting, go ahead and refer to our link right here at the description below at RoyalBluFX.com to become a part of the Royal Blu FX family.
Nothing can stop me. I'm all the way up. All the way up.
Alright, so why do CHOCs happen in the Forex market? Alright, so this question is very broad, obviously, but in the nutshell, I'm going to break it down to you in terms of why it happens. I believe that knowing the whys in the markets is very important because when you understand the why, you're going to understand obviously how the markets perform in their own behavior, right? Now, in the series, we're going to talk a lot about the whys. I'm going to be releasing more videos in this next few weeks about the whys, why certain things happen in the Forex market. So you, the viewers over there, can understand why things happen in the Forex markets, right? And the more we know why, the better we'll be able to perform in the Forex market. So let's begin. So have you ever seen something like this? I'm going to do a bullish example and a bearish example. Let's start with the bullish. When prices are going upwards, right, something like that, then all of a sudden price breaks below this low right over here, then you have price coming back up. Now we refer this to as the CHOCH or the CHOCHs, right? And the reason for that is because price is breaking a high, then breaking a low, right? Price is showing us that price wants to reverse, going the opposite direction now, going bearish. All right, but the only reason why prices reversing or retracing is because now prices have been taking out liquidity. All right, so the short answer really is for why CHOCs happen is because price is actually taking out liquidity. All right, and if you haven't known that, you'll understand why in this video. So when prices are going bearish, right, and all of a sudden prices are going bullish like this price right now has just taken out liquidity, and you might be asking, like, well, what is liquidity, right? Well, please go ahead and refer to these videos. There's a link I'll put up here above this video over here, okay? But the reason why price is taking out liquidity is because, as we all know, prices, the banks are taking out liquidity to move the markets, right? We know in order for the markets to move anywhere, liquidity must be taken, right? So if you look at these two scenarios here, okay, when price is going upwards like this, price has taken out the highs, right, like that, right? There's liquidity resting above this high. When prices are going below like this, prices have taken the sell side liquidity right here, right, to only retrace back now, right? Now, when prices are retracing, prices is also taking internal liquidity as well in order for prices to push bearish. Okay, same thing goes for the bullish side of things. When prices are going bearish like this, taking the sell side liquidity and then pushing bullish like this, taking the buy side liquidity, then retracing, then taking out the internal liquidity like this before prices continue to the upside. All right, so that's, in a nutshell, that's why CHOCs happened. All right, but let's go into the live chart examples. I want to actually show you how it works and how it looks like on a live chart example. So let's go right here. All right, right here. So, right here. All right, I'm going to show you guys how it looks. We're going to analyze this together. Oh, here we go. All right, so if you're looking at this, all right, notice when prices are breaking structure, right? And when prices are retracing, what is price doing? Well, it's going up. It's retracing only for the real purpose, and the real reason is because price is taking out liquidity. Okay, notice how this high here is higher than this high, right? Prices were going bullish here at one point in time, right? And then prices decided to go bearish all of a sudden. Why? Well, because if you look to the left here, you can see there was liquidity here, right? There's a triple tops or maybe double tops right here that you can see liquidity resting above this high here. If I can make a liquidity sign like this, right? Something like this. And now price is just taking out all the buy side liquidity, push price to the downside, it started taking out all this liquidity, right? Now we're thinking, okay, well, what's happening right now? Why why was there a CHOCH that occurred, right? Well, it's because price is just taking liquidity from the highs and taking liquidity from the lows, and now pushing price lower, right? And now that price broke again, look what's happening again. If you zoom in here, what's happening? You can see another CHOCH is happening. There's a high broken, and now there's a low broken, right? Now liquidity was resting right above here, and liquidity was resting right below over here. Prices are breaking again. Now they're going to do the same thing over and over again, right? Prices extended, right? Retraced a part of the way. You can see there's liquidity resting above, liquidity resting below. Prices came in, took out the highs of this liquidity, took out the lows of this liquidity, and pushed price even higher now, right? Now we have a break of structure, right? Or a CHOCH in this case as well. You can see that there was more liquidity resting here, right? When price took out this the lows liquidity here, price decided to change direction now. Okay, you can see how price took liquidity from the sell side and took liquidity from the buy side. This is important because we need to understand why it's happening, right? Again, the only reason why price is moving is because the markets are taking out liquidity. In order to move the markets, we need to understand that price has to take out liquidity. The banks have to take out liquidity in order to push the markets back in the intended direction or the opposite direction. In this case, you can see we have a CHOCH here right now. We had the breaks of the lows and the breaks of the highs. Now price is moving, pushing bullish, right? But at the same time, if you look all the way here to the top, right over here, what do we see? We see that we have a unmitigated order block. Supply right here, okay? It's right there. So in this case, all right, we can see this area here, this zone, supply zone, getting tested. All right. Once it gets tested, what are we expecting for this for the price to do here? Right. We expect for price to respect supply, the supply zone. Then we expect for price to now extend, right, push bearish now, and then now what do we get? Right. Let me show you a little something over here. Right. When price touches our supply zone and then does this, what formation do you get here? Right. What do you see here? Right. I'll give you a second to think about it because this is very interesting. Okay. If you guys haven't guessed already, you're seeing the CHOCH, right? You're seeing the CHOCH, but more importantly, you're seeing that price took out liquidity, right? Took out sell side liquidity. And now price push bearish also took out more liquidity. All right, I don't know how price is going to pan out here. It might do this, right? Push bearish, and then it'll take more liquidity like this, then retracing, okay? Let's do this a little bit better so you guys can see what I'm talking about here. So when prices retrace from here, right, we're expecting for price to respect the supply area, right? Price would have taken out liquidity here. Price may come down this way like this, right? We're looking for something impulsive, right? Price may pause there, maybe take a break, maybe create some more external liquidity here. Then price will push bearish now, right? Now we see that CHOCH really clear, and it gives us the intent to think about how price is going to act around these areas, right? Like this. Liquidity was broken in the high. The high was the sell side. The buy side liquidity was broken from the highs. Now we have the sell side liquidity broken from the lows, and now look what you get, right? You have a high and a low, high and a low. We have the CHOCH. We have that CHOCH formation. We have that liquidity taken. Now prices are going to potentially retrace at this high here, right, or this high here, for that sell to continue. Now you can take advantage of the sell because we had price already did its job. It took out all this liquidity and it took out more liquidity here, right, just to mitigate this high here, and then it's reversing the market. It's retracing. It's extending now, right? We can look for prices to retrace at this high here now to extend to the downside, or look to create more internal liquidity like this, right? Waiting for price to retrace all the way to the extreme high like this, and then wait for that CHOCH again, only to find out that price is going bearish to target this low, right? Now you might be thinking to yourself, okay, well, Royal Blu FX, what about this here, right? Isn't this a break of structure? Yes, it is a break of structure, right? The interesting thing about this is you need to be paying attention to your higher time frame analysis, not your lower time frame. Even though your lower time frame analysis does have confluence with the higher time frame all the time, right? But in this case, as you can see here, this isn't a buy. This isn't going to be a bullish market just yet, right? Because we have this extreme high right here that wasn't violated by this move just yet. We don't even know if price is going to violate it. If it does, then we know that for a fact this is our extreme low here. Then we're waiting for price to retrace all the way back here now, all the way to the supply demand area, and then we're looking for price to take off, right? But only in this case are we already analyzing this market and thinking to ourselves, well, we're anticipating that markets should just retrace back, and we're looking for price to respect the supply zone because it's still a sell in the long run, in the long term, right? But let me talk to you about this though, right? Since we had a CHOCH here and liquidity was taken out right from this low here, right, and liquidity was taken from this high here, we are expecting for price to retrace back to one of these areas here, most likely this area here, right? And let me just kind of get rid of myself over here. All right, we're expecting for price to get right over here. I'm trying to get my demand area here. Demand. Okay, there we go. All right, and the reason for that is because we have what's called a flip in the market, and we're able to capture this moment here where price retraces to this flip. It might have a retracement, right? So it gives this area here, when price comes and breaks here, it gives us a good reason for price to come back at this flip area here, flip zone, right, to push prices upwards, okay? And this may be just a retracement on a higher time frame, chart, right? Right, this higher time frame structure right here, right? So when prices are retracing, we're either looking to retrace here or we're looking to retrace at this supply zone before prices continue. So this is still a buy, right? But we need to look for confirmations even on lower time frames now. But we know in hindsight that the market is bearish, so therefore we're looking for prices to extend to the downside. We're not looking to hold this long term because this high here wasn't broken, right? This high, the extreme high, wasn't broken. But we are, however, looking for buys in this area, in this demand zone as well, right? Last case scenario here, we see another demand zone here too. Prices can come and react at this demand zone as well, okay? Only because we took out liquidity from the highs and from the lows here. We're looking for some sort of retracement, okay? We're not looking to hold this for the markets to extend to the upside like this, right? We're just looking for price to come and respect one of these zones, and then to give us this CHOCH, small time frame CHOCH right here, right? And then something like this, and then we're looking to take advantage of this move to push to the upside somewhere in these supply zones. All right, let's move forward. So again, why do CHOCHs happen? Because they're taking out liquidity, okay? Let's look over here. You can see what's happening here, right? There's a CHOCH at the highs, right? CHOCH at the lows. You can see what's happening, right? So the market is continuing to the downside. You can see if we zoom out, price is just bearish, right? So when CHOCHs happen, again, just remember, in order to move price anywhere, we need the liquidity to be taken. Liquidity was taken from the buy side and from the sell side and from the buy side, right? And then now prices are retracing back to an area of supply right over here, right? Let me just take this out to make everything a little more neater here for you guys. Okay. All right. And when price is retracing, notice what's happening. All right. We have internal liquidity in here. All this internal liquidity has to be taken now for price to push to the downside. Okay. We just took liquidity from the sell side here. I'm sorry, from the buy side here. And when price extended impulsively to the downside, it took sell side liquidity. Now price is using the sell side liquidity to push prices backwards, right? Pushing them back up to the area where there's an unmitigated order block. Once that has happened, you can now see internally that there has to be liquidity that's taken in order for price to push to the downside. Hence this move here that retraced all the way to the demand to supply area, right? And then pushing price down now. Okay, we're using all this internal liquidity here now to push prices to the downside. This is very easy to see how the markets are behaving, right? Okay, let's look over here again. What do you notice? Liquidity taken up from the upside, and liquidity taken from the downside here, right? If the market can, okay, there we go. My computer's a little bit slow. All right, once that has happened, again, we need for that internal liquidity to be taken, right? So therefore, you can see here, oh, and sometimes, right, look at this. If we put our supply zone here, you can see that price hasn't taken out liquidity, right? It just left all this liquidity resting right over here. This can be acting as inducement, and excuse me, this can be acting as inducement for future mitigation. So when you zoom out, this would be somewhere on the daily or the weekly where price is going to eventually come here and mitigate the supply zone, something like this, right? So just because price didn't actually mitigate this doesn't necessarily mean this was wrong. Our analysis is wrong, right? But what we're looking for here is waiting for that CHOCH to happen, right? Price actually, it looks like price reacted off to a supply zone down here. If you go on the lower time frames, you can see that there's a supply zone that's right there. There's a flip zone. Okay, let's zoom all the way in here so you can see it right there. Okay, and it still actually hasn't mitigated, which is kind of funny. Okay, there we go. It hasn't mitigated anything. So this area we know is unmitigated, but yet we still got the CHOCH. But does that mean this this area is untradeable? No. What we're looking for is if price hasn't tapped to our supply zone, we're looking to adapt now. We're looking to adapt into the market, and we're looking to take advantage of the next move. So what happens is, notice again, over here, when prices are giving us that CHOCH, okay, prices broke this high here. Notice that there's liquidity resting above, right? There's a CHOCH that happened here, took out liquidity in here. All right, internal liquidity, price broke below, took more liquidity. Now price is retracing back up, taking this internal liquidity, and we're looking for this high to be respected right now. If not, we're looking for this liquidity to be taken out here, right? Then tapping this supply zone, this major supply zone, and then we're looking for price to continue to the downside. Okay, yeah, so that's it, right? You can see CHOCHs happening everywhere, but it's really important to know why they're happening, because the more you know the why, the better you're going to be able to analyze your markets and be able to trade correctly, right? You can see them everywhere. All right, right here, right? There's a high broken to the highs. There's a low broken to the lows down here, right? Price is retracing now, mitigating this high to take a sell from here. There's internal liquidity in here that we can't see. Of course, if we go on the lower time frame, we can see a lot better. So I can show you guys what it looks like for the internal liquidity. All right, let me zoom out here. Okay, we're all the way to the low side. Let's go here on the 4 hour. My computer's lagging a little bit, so forgive me for this, guys. Okay, let's go back out. All right, let's go look in here. This is where we want to look at, right there. And then let's go all the way down to 30-minute. All right, here we go. All right, so you can see that there is liquidity being taken out. Okay, we see that there's liquidity there, right? There's also inducement in the market. There's also liquidity and inducement right there. To make it a little more visible for you guys, let me just show you. All right, here we go. Liquidity sitting right there. You can see that there was a high there, right? And this high this high right here tried to break this low, but it wasn't able to. So we have a failed high that was trying to break the low, and it failed, and price pushed all the way to the upside. So we consider this as liquidity resting right just above. Prices are pushing up. We know that there's an area, the extreme needs to be mitigated. Therefore, we have inducement and liquidity forming here as well, which we're also looking to take advantage of. Price just created it in order to take out more liquidity, right? Price is pushing upwards, right, creating more liquidity just to mitigate this. And now, what do you see here? If you zoom out like this, right? We see now the price just took out all this liquidity, all this internal liquidity. We're looking for a CHOCH, right? Here's a CHOCH. There's a break to the upside, and now break to the downside. If you notice, what's happening to the downside? We just took internal liquidity. We have that CHOCH, right? We're looking for price to retrace, right? And then we're looking for price to retrace to mitigate something, and then create more internal liquidity, and then take price to the downside. Right here, you can see price isn't fully. Oh, actually, I see it right there. Price did actually mitigate something right here. We have this as the flip, right there. If you extend this, you can see we're just tapped in by the hair right over there. So you could have looked to take advantage of this trade like this, obviously, and then target your current major low right over here, right? And this is where you would end and take profits like this, right? So this just keeps happening over and over and over, guys, right? It's a very easy method to use if you just understand why the CHOCHs happen. You can see them everywhere, right? Let's look over here. CHOCH broke to the upside, CHOCH broke to the downside. What are we doing? We're mitigating the highs, right? You can see there's internal liquidity being mitigated. This high is being respected. We look to take price to the downside. Okay, let's show you a few other examples. Let's just show you where prices are pushing bullish, right? You can see here we had a break to the downside, a break to the upside. All right, so there was liquidity that was taken from the lows, liquidity taken from the highs. Prices came back, tapped a flip zone, and then pushed price up, right? You can see also that there's internal liquidity in here, in this area here, and this is where prices wanted to react and take prices to the upside. So let's go down here. You can see it very clearly on the 30-minute right here. Notice that we had a lot of internal liquidity here. Also this area right here. Okay, there's a lot of liquidity there. There's inducement as well. Okay, this area here is the inducement, right? And then price tapped our order block right down here. Okay, this unmitigated area, which is right there. All right, and then price pushed up to the upside like this. Let's look at another example. All right, price is pushing up, right? Notice we got the CHOCH. Again, we have the liquidity taken from the low. We have liquidity taken from the high. More importantly, we had the major high broken, which means we took out this liquidity as well. So now we need price to come and retrace right back to an order block. And one thing we have to always take into account is that the markets will never, they don't have to always mitigate, right? Because the banks have a lot of open positions everywhere in the market, so therefore you don't necessarily have to look for the markets to come and mitigate all the time. They can mitigate whenever they want, right? Because they have so much liquidity in the market, so much money that that they don't need to mitigate anything, right? They'll come back and later mitigate, right? So there we go. You can see another CHOCH right here happen. Why? Because if we're following our structure, you see lows, highs, right? We had that CHOCH broken below. We had another CHOCH breaking to the upside like this, right? Okay. You can see obviously now that we have the lows and the highs broken, liquidity taken from the downside, liquidity taken from the upside. What do price do? They come and retrace, right? We just need to follow our structure, ladies and gentlemen, and that's what we're going to be. That's how we look at the market, right? Oops, excuse me, something just went a little too far there. Okay, once we see this area here, we mark our down candle here, the last down candle. We just drop down the lower time frame. Now we need to see that liquidity needs to be taken internally, right? The same process goes for everything, right? You just need to follow your rules right here. So we have so much liquidity up here. Okay, and then we also have we have inducement right there. This can also be counted as inducement as well, to be honest. Inducement creates liquidity, so you can also see that we have a lot of liquidity setting up right here as well. Okay, so we notice that we're not going to just strike at this low here. We're going to strike at this low down here. If we see this, there's a wick right there that was not mitigated when price broke above. So we have a lot of inducement here, inducement liquidity, more liquidity. Price took us out. Price tapped in, gave us that CHOCH again here from the entry time frame now, and now here's where we would look to enter again because we see the same formation happen. The CHOCH took out liquidity. What do we see here? Liquidity, right? We see above here, liquidity, right? Price took out liquidity, mitigated this supply zone, pushed price all the way back down to the extreme. We look to take a buy here only because this was the next buying area, right? We got that CHOCH, and this is where you buy and you target the highs right there, and you're done, right? So I hope you guys all understand what I'm talking about here in terms of how CHOCHs create, create, right? Why they create is because they took out liquidity from the previous highs and previous lows, right? That's what it does, right? And CHOCHs again just essentially tells us that prices are reversing or changing direction or continuing direction as well. And if you guys don't know too much about the CHOCHs, or you're maybe have a few more questions about the CHOCHs, and maybe you haven't seen some of our videos, like right over here, please refer to those videos. I'm going to leave some links above right here about our CHOCH videos. Go ahead and check them out. Until then, guys, thank you so much for watching. If you haven't already yet, please like this video if it found it helpful, and go ahead and subscribe to this channel, because we do drop fire content every single week. So without then, I'm going to see you guys later. Peace.
Nothing can stop me, I'm all the way up.